So Philippe, Toby, good afternoon. Thanks to be here.
Very happy to be here.
Wonderful to be here.
So the first question is to both of you. Let's assume that the risk aversion exists. According to you, where is it? At the LP level, GP level, entrepreneur level, or maybe corporate level? Well, what's your vision?
I don't know what risk aversion you're talking about. We've seen an unprecedented level of investment activity in the ecosystem in the last several years. Deal volumes have increased dramatically. Size of funding rounds has gone up dramatically. You know, the late stage market, you're seeing deals hundreds of millions of dollars. You know, this is not a time I think I would talk about risk aversion at all. I think it's a time of bullishness and excitement about the potential for technology to change the world, and more we're seeing that with the smartphone platform, with big data and cloud infrastructure, and so many strong trends that are creating opportunities that we wouldn't have dreamed about 5 years ago. So, I think there's a lack of risk aversion actually.
Okay. Is it? Do you share the same vision?
Well, I mean, I would totally share the vision that the ecosystem is really booming right now, and that we're seeing an unprecedented level of innovation. I mean, we're seeing with the growth of companies, like BlaBlaCar, for example, and Showroom Privé, and before that, Criteo. I mean, France has shown that it can deliver multi-billion-dollar exits. And I think that sets goals for entrepreneurs. That has raised the bar for entrepreneurs in terms of the level of ambition that they can achieve. And that creates a lot of excitement.
In an era of lean, do you believe in small tickets before product market fit, or do you think we need to give a lot big money even for starting companies?
Well, I mean, I would say it really depends on the team and mostly the business model, right? I mean, on our side at ACCEL, we do both very seed stage investment. We're going to put $1 million at work with a great team to see what product they can come up with, and then we can write $18 million Series A checks to accelerate the growth of a company like Algolia, which is what we did earlier this year. So I think it really depends at which stage of the company you're investing, and what is the stage of the product, what is the stage of the market.
I think we do like to see entrepreneurs achieve product market fit with smaller checks, because we think that achieving that product market fit requires a lot of invention, it requires a lot of adaptation, and once we see product market fit, then we will very, very quickly try to help the company raise a lot of money to expand. But getting to product market fit, there's not really a linear relationship with the amount of money you have. It's much more, as Philippe said, about the team that you have and the product idea that you're working on. And so it could take a short period of time, or it could take a long period of time, depending on the experience you have and the product idea you start with. But usually, if you start with smaller amount of money, you end up wasting less money to get to product market fit.
Okay.